Welcome to the RECON Trader. In today's video, I will share with you a profitable day trading strategy, more of like a scalping strategy based on only one indicator. But before we get too far into the weeds, let me make it clear. I never suggest you trade based on one indicator. I have just decided to create this video to show you all the importance actually of the VWAP indicator and how it could be used as your only indicator if that's all you had access to. So with that all being said, let's get into the weeds. And we will start over here in TradingView on ETH USDT perpetual contracts. We're looking at 5-minute candles over on the Bybit exchange. And what you can see looks like pretty choppy price action, and you might be thinking to yourself, why in the world would I want to trade this price action when you more than likely could just get chopped up? Well, if you just look at the chart the way it's laid out right now, it does look extremely dangerous. And so with that in mind, let's add the RECON VWAP moving average indicator to the chart. And in this case, under the settings for this indicator, I've actually disabled the moving average because again, I only want to see the VWAP on the chart. If I actually toggle the moving average, you see the yellow line appear on the chart. That would be the moving average that is part of my RECON VWAP moving average indicator. But for this example, we're just interested in the VWAP. So I'm going to shut that moving average off. And now you can see the VWAP, which is represented by the red line and occasionally, in this case, the green line moving through the chart. And again, I want to make it perfectly clear, I would never trade based on just this one indicator. I happen to believe you need a trend-based indicator, you need a volatility-based indicator, and a momentum-based indicator. And as far as a momentum-based indicator, I do have my own RECON momentum indicator that I created. And if I add that to the chart, you can see this is what it would look like. And basically, I would be looking for momentum in the direction of where I want to trade. For example, if I wanted to get short over here, I want to see the momentum in the red, meaning that the momentum is strong towards the downside. Or if I wanted to get long, maybe on this candle here, breaking above VWAP, then I would look at the momentum indicator to see if I had bullish momentum. And in this case, you would have bullish momentum on this candle, so you might take a long. However, the purpose of this video is all around VWAP and how this indicator really is perhaps the most important indicator for day trading, and perhaps more specifically scalping on these lower time frames of like 5-minute, 3-minute, or 1-minute. That is what this video is looking to address today. So with that all being said, these are basically trend-based trades. And if I zoom out a little on the chart, first thing in the morning around 6 a.m., the price of ETH dumps. So the overall trend for the entire day of ETH is bearish. As you can see, ETH spends the majority of its day below VWAP. Thus, it is a bearish overall trend for the day. And so with that in mind, starting around 9 a.m. in the morning, we get our first opportunity of a trade where essentially the price of ETH rejects up here at VWAP. And if we were to enter on that rejection up here at VWAP, we get a close back down below VWAP. We would enter at around 1854. And we would drop in a stop loss above VWAP, and when I'm scalping, I'm looking for at least 1.5 to 2% profit. And so if we went with the minimum, 1.5 would be just above the wick on this candle. And so if we called it 1.5 for a stop loss, we actually hit our profit easily down in this range here, and we are never at risk of getting stopped out. And for this example, I wasn't a hero. I didn't get out at the bottom of this wick way down here. Now in future videos, we can talk about maybe scaling out of a position so you can capture more of this move. But for now, we're keeping it very simple, quick shoot and loot type strategy. And so my next target would have more than likely been on the breakdown once again below VWAP, with a stop loss at more than likely up here around that 2% level, which would be again at the top of this wick here. Or if you were feeling froggy, you might put your stop loss at the top of the wick on this candle here, and that would put you at around almost 3.5%. Now, I understand it says 0.33%. I actually trade with 10x leverage, thus I'm talking about the percentage I would capture with my 10x leverage. And so for me, using 10x leverage, 0.33% would actually equate to 3.3% profit because it's 10x leverage on top of that number. So when you hear me talk about profit and loss as we go through these trades, you can just assume I have 10x leverage on, thus the number is going to be 10x, which you actually see on this tool. So again, if we went with that 3 to 3.5% stop loss, I would need to get at least a 1-to-1 risk versus reward, and I would have hit my profit down on the wick of this candle down here, and this again would have been a profitable trade. So now we're 2 for 2. And then the next trade again would be this trade right here where we get the break down below VWAP. And I can tell you simply by eyeballing it, this one's a loser because my stop loss would have again been back up in this area here. And we don't ever even come close to that. And we get stopped out back up off of probably this candle or maybe this wick here. Regardless, we definitely get stopped out. However, shortly after getting stopped out, we get another opportunity of a break of VWAP, and we have our profit target more than likely back up here around, you can see, maybe call it the 0.37, or you could round up to 0.4. So you're looking for 4%, or maybe even 4.5% if we went towards the top of the wick on this candle here. Again, if we draw that in down here for profit, we actually almost do hit it perfectly on the bottom of the wick on this giant red candle all the way down here where you can see 4.7, and that's right at the bottom of this move. So this one you would be the hero and essentially capture the bottom of the move almost with a 4.5% take profit. Now more than likely I would have actually set my take profit at the top of these candles, probably more or less around 4%. And that would have come in right still down on this wick, just not at the bottom of that wick. Now the next trade would be on this rejection at VWAP. Once again, we need to figure out our stop loss. At a minimum, I'm going for 1.5%. And if I look back, that 1.5% is just around these candles. Maybe we go up to around 2%. Which would be at the top of all these candles back here. And so let's say we go on previous price action by checking our 6 for our stop loss of 2%, and we would get that 2% on the wick of this candle down here. Again, almost being the hero and tapping out at the bottom of the wick on this candle here. So now we're 5-1, and the next opportunity is again on the breach down below VWAP. And remember, we have a history that these breakouts above VWAP keep failing. And that does help confirm the overall trend is still towards the downside. So if we jump in on this next break down below VWAP, essentially a failure of Bitcoin bulls to push above and hold above VWAP, we would look for a stop loss, again, probably up around that 2% level, which does come in pretty much at the top of these candles here, not the wicks, but the top of these candles. And we would hit our profit on this candle right here, and that would be another winner. And again, we were never at risk of being stopped out on this particular trade. So now I believe we're 6-1. And if you recall, our day started back here at 9 a.m. We're trading all day long essentially, and we get out on this candle here at around 5 p.m. So there's a day worth of trading. However, the wonderful thing about trading crypto is it's a 24-hour market. So we could take a look at one last trade here that we get a perfect opportunity. After getting out on this candle, the price reverses and eventually rolls over, gets back down below VWAP. We set our take profit perhaps up here around the top of these candles back here, around 3%. Or maybe you could even go up as high as maybe 3.5% would put you up towards the top of this wick and the top of these candles. Either one would be legitimate, and honestly, either one's going to be a winner. You can see right down here on this candle at the far right hand side of the screen, it sells off and wicks down into your profit target of, let's say you did the 3.5%. So now you're 7-1. You essentially are at, I believe, around 85% or maybe 86% profitable on the day. And you would have had a full day of trading from essentially 9 a.m. back here till around 1800 or 6 o'clock p.m. And so to wrap it up, if we drop in the drawings of each one of these trades, you can see there's 1, 2, 3, 4, 5, 6, 7 trades. 6 of them were winners, and we had the one loser right here. Overall, for that particular day, you would definitely be winning the battle. So, I think that's enough jaw-jacking for this video. I will continue to do these type of strategy videos in the future, so now would be a good time to shoot that subscribe button so you don't miss those future videos. If you like this video, do me a favor, spike a like. If you have questions or comments, drop them in the comments section down below. And until next time, remember, never send your money into battle without first doing your recon. See you in the next video.